Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is November 13th. Today we are going to take a look at one we have looked at on the channel before. It just keeps on dropping, so I thought it would be worth revisiting Target. This is out of the consumer discretionary sector. Let's jump right in the video. And if you want to know more about this company, check them out at corporate.target.com. That is corporate.target.com. That is their homepage where I pulled this information from. 1960, Dayton's explored discount retail as the Dayton Company. That's what they started out as, the Dayton Company, so long before they were Target. Looked for new ways to strengthen relationship with guests. Company leaders saw an opportunity to develop and introduced a new kind of mass market discount store that catered to value-oriented shoppers seeking a higher quality experience. Through visionary leadership, the company took the first step toward transforming its family-run department store chain into one of the nation's largest discount store chains. On May 9th, 1961, the Minneapolis Tribune reported that the Dayton Company planned to form a new discount store chain. The store's new president, Douglas J. Dayton, drew upon the company's vast wealth of department store experience and stated that the new store would combine the best of the fashion world with the best of the discounted world, a quality store with quality merchandise at discount prices, and a discount supermarket. 75 departments in all. Shopping at a new unnamed store was envisioned to be fun, delightful, and welcoming to the entire family, featuring wide aisles, easy-to-shop displays, fast checkout, and loads of well-lighted parking for 1,200 cars. That must have been an important selling point back then, though I can't imagine that they actually needed 1,200 cars. I can't think of a parking lot now that if you drove up to would house or allow 1,200 cars to park in. That's a lot of real estate, unless it's a parking deck, I guess. So 1960, and then we jump to 1962, the creation of the brand that we all know, Target, and their iconic logo. I mean, if you see this logo, if you go back here, this is not the first one. The first iteration had more circles, but this is what it ended up at. In the months before the first Target store opened its doors, former Dayton's director of public Stuart K. Whitus was tasked with naming and defining the new retail store. Whitus and his staff considered more than 200 potential names. In a burst of red and white inspiration, they came up with Target and immediately envisioned a classic bullseye logo. You can read the rest, but as they say, the rest is history. Target was born, the logo was born. From 1960 to 1962, they were kind of putting this in place, and it is the store that we know today that provides, all the retail goods that shoppers go to get. My wife shops there. I know a lot of people that we hang out with shop there. You may shop there. Let me know down in the comments below if you shop at Target. And again, if you want to know more about them, check them out at corporate.target.com. That is their homepage where I pulled this information from. Now on to the rest. The reason we are looking at them, they are down 0.95%, and as I said, they continue to drop. Closed out the day at $107.30. We are talking about Target Corporation, ticker TGT, out of the consumer discretionary sector. 52-week range as low as $102.93, as high as $181.70. They are much closer to their 52-week low than their 52-week high. Average volume 4.5 million. Today's was 3.9. A lot of volatility, but overall a sell-off throughout the day. Market cap of $49.53 billion. A beta of 1.04. So they are slightly more volatile than the overall market. That's what beta means. 1 being the market, anything under 1 being less volatile, anything over 1 being more volatile. Price to earnings ratio, very nice on this one compared to their 5 and 10-year average, $14.72. Earnings per share is $7.29 per share. Earnings date November 15th, so that is coming up. They may see the earnings not coming out. Usually, if you see something on the front end like this before earnings, they are projecting out what they think are going to happen in earnings. So maybe we are going to get a bad earnings report. I know there have been reports in the news that they are dealing with some theft and some other issues overall, some political issues. We're not going to get into the politics of all this. I'm an investing channel, not a political channel. If you want to deal with politics, go to another channel. Go do that somewhere else. I don't want to hear it. I don't want to get into it here. That's not what this channel is about. So let's keep going here. Forward dividend is $4.40 paid out on the year. They are a quarterly payer. Nice dividend yield. Starting dividend yield right now of 4.06%. Ex-dividend date November 14th, that's actually tomorrow. So you probably, not probably, most of the time what you see on the ex-dividend date is it will drop again. So this will probably drop tomorrow on the 14th by the amount of the dividend payout, right? That usually happens on ex-dividend date, and then the stock typically recovers. So we'll see that tomorrow, probably another drop down. But again, sometimes that's whenever I use those ex-dividend dates to get my stocks a little bit cheaper around those. So that's one way I play the ex-dividend date. And you want to, if you want to get the dividend, you need to buy the day before the ex-dividend date. So you needed to be a buyer or an owner of Target shares today. If you buy them or own them tomorrow, you will not get the next dividend date. The ex-dividend date locks it in, but you really need it the day before so that you own the shares, right? So just a little word about the ex-dividend date. It's not necessarily the day ex-dividend date that locks it in, it's the day before. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information, they see it going up to $143.63. So they see quite a bit of upside in the price here, about 25%. I'd have to do the math. I did not do the math. So do the math there. 1.07 divide by 143. That'll give you the percent there. Now, I like to get into statistics, look at dividend yield theory. We're looking for dividend yield theory, a higher dividend yield currently than what their 5-year average is. To do that, we go into dividend statistics. We look at dividends in splits. We go down to their 5-year dividend average, 2.29. We compare it to what it is currently, 4.06, or over here where it says forward annual dividend, 4.06, same number. And since it is higher, that speaks to undervaluation and significant undervaluation, at least according to the dividend yield theory on this one. Another thing I like to look out here is payout ratio. I like 75% or less. This is sitting at 59.26 according to Yahoo Finance. That is under the 75% or less that I like. And it looks like their ex-dividend date, November 14th, as we saw over here, they're going to pay out on December 10th. So if you owned them today or bought them today, you will get that next dividend on December 10th. So kudos to you investors out there who do own this one on the 13th. Now, I like to get into the financials of a company. Really good information here. You're going to find their balance sheet, their income statement. How is their debt to equity ratios? Are they paying down debt? How does their revenue look? How do their margins look? A lot of good information. If you are an individual stock picker, you need to be in the financials and understand the financials. One of the things it also shows is free cash flow. We want growing free cash flow because we want growing dividends, and dividends are paid out of free cash flow. So 2020 here, we went down 4.09 billion. 2021 jump up to 7.8 billion. Bit of a drop down here in 2022 to 5.08 billion. But I want you to notice something on the repurchase of capital stock here above. We'll walk through that here in a minute. And then a big drop off here from 2022 to 2023, negative 1.51 billion. Now, repurchase of capital stock, let's look at the end, 1.6 billion to date. So it looks like they've rebounded a little bit. I want to wait to see what 2023 looks like. This might be the last reported earnings here, or what they're projecting out. But anyway, so far in 2023, it looks like they're in the negative. Now, repurchase of capital stocks, you can see here, they are repurchasing their own stocks. Big tranche in 2020, 1.5 billion, 2021, 745 million. Big jump up in the repurchase of shares here in 2022. So that more than accounts for this drop from 2021 to 2022, but down in the repurchase of shares, at least so far in 2023. So this may not, or doesn't look like it will account for the drop in 2022. And they may have had some charge-offs, some write-offs here in 2023. A lot of times these companies, whenever you see a big drop like this or in the negative, it's capital expenditures, or they pay down a big amount of debt, or they may be, again, repurchasing a big chunk of shares. So we'll have to see how 2023 shakes out. So far, it's not looking good, which would account for some of this drop. And like I said, some of this may be write-offs, capital expenditures, or the theft. Like I said, there was some reports recently that they are dealing with a lot of theft, and those become write-offs as well, right? If you don't have the merchandise to sell because someone stole it, it becomes a write-off for the company. They write it off as a loss. That's just how it works. Let's keep going here. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. Pick any 2-3 sources that you like. Just make sure you're picking more than one so you can make sure the information you are getting is accurate. And here we're going to look at the 29 stock analysts here. They call it a consensus buy. They have a low estimate of $116. It currently sits 8.11% lower than their lowest estimate. They have an average estimate of $152.59. That would be a 42.21% increase from where it currently sits. And if it happened to hit their high of $195, That would be a 81.73% increase in the stock price from where it currently sits. That would also be a new 52-week high. Now, statistics, you're going to find the same statistics, the same financials information. They go back a little further in stockanalysis.com than Yahoo does. That's another reason that I like it. Plus, they present it in a little bit of a different manner. I go into statistics. I like to look at the return on equity, return on invested capital. I like 10% or better. And as you can see, return on equity here sitting at 29.4%, almost 3 times the 10% I'm looking for, and very good for a company like Target, a retail store like Target. Return on invested capital, 12.18%. Very good number there as well. I also like to look at the EPS forecasted growth over the next 5 years. I like 5% or better. They are estimated to grow at 14.44% for their earnings per share. Very, very high growth on their earnings per share. Revenue growth set to grow at 2.32%. That's just you do want growing revenue over time, but I don't really use this as a metric unless I'm doing a deep dive. But this is a little added bonus I throw in here anyway. Now let's check out the dividend. And again, payout ratio, I think we saw 59%, a little over 59% on Yahoo Finance. They're saying 60% here. Either way, under the 75% that I look for, plenty of room to increase this dividend. And they are increasing the dividend by 10.10%. Very nice dividend growth on this one. Under the payout ratio we're looking for, we went back to November 17th, 2020. They were paying 68 cents. They raised it up August 17th, 2021 to 90 cents. August 16th, 2022 to $1.08, and most recently August 2023 to $1.10. So consistent dividend raises here. They do pay out on that March, June, September, December timeframe. Very nice dividend growth, decent payout ratio. Overall, this one looks, other than some issues they're having, political issues as well as the issues with some theft, this one looks very interesting. That's why I wanted to look at it again. I mean, I was looking at this when it was in the 120s, 130s. It's dropped way down. If you could get this under $100, man, that would be hard pressed to find a better deal in the market, in my opinion. Now, this is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested. And if I am, then I throw it in the possible buy pile and do more of a deep dive, get into the financials, do a discounted cash flow analysis, see where I'm willing to buy it, and we go from there. Well, that is it for this one. That is Target, ticker TGT, out of the consumer staple sector. What do you think about Target? Again, not a political channel, so if you want to be political, go ahead and drop your comment down below, but I'm going to ignore it. I'm not going to respond to it. If you want to talk about the company overall and how you see it going forward, go ahead and let me know down below in the comment section. Is it in your portfolio? Love to hear from you in the comments. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences. Stocks like this that we may be watching, we may be buying, or you may be avoiding it. And it's okay if you're avoiding stocks for whatever reasons. That's fine. That's your personal choice and opinion. We're all different as investors. We're all different as people. Just keep it civil in the comment section down below. Like I said, this is not a political channel, but I know there are some political implications around this particular company, and there will be for some other ones that we cover in the future. I'm just not going to make this channel about politics, and it doesn't come into my investing criteria. My politics are my politics. Your politics are your politics. If we were to be able to sit down and have a conversation, that'd be great, but online is not the best forum to do that, in my opinion. While I do personally read and respond to the comments, I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Target you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. And for those of you who have shared your suggestions, I do have them written down, and whenever I can work them into a video, I will do so over the coming weeks. So really appreciate those suggestions for those of you that have already made them. And with that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.